Hello and welcome to Trade Talks with Jitesh. So this is our weekly session. We'll be discussing what were the trades we took on last week and what exactly is our trade plan for the next week. So let's dive directly on the charts. The bullish momentum continued as we discussed in last weekly session. The scenario 2 was very highly probable and which actually happened with a very tight range of below 300 levels of ATR. And as we are retracement traders, few stop losses got hit for the last trading sessions. And as of now, I'm not having any bullish open positions. The positional long were all closed off at supply zones. So as of now, I do not have any bullish positions. Yes, few short positions I do have. We'll be discussing on how the trade plan we have for the next week. So let's dive directly for the next week trade plan setup. There are few key data points which we need to see that there is a significant drop of ATR on week basis. Like this week, we had ATR of roughly 460 this week, and in week 2, the ATR dropped to 326, and then on week 3, the ATR dropped to 245. So I'm not expecting market to go to have ATR of above 250, which is less likely. But yes, market anything can happen. So most likely we might see a very tight range market, and this is one key factor. There is a ATR drop, and next the bullish momentum is fading off. That is pretty much evident. And then VIX is also dropping significantly. It has dropped to below 12. And as of now, the ATM straddle is around 166. So that is also hinting that the range might be very less for this week. And one more thing, very key point which we need to see that for the whole month, the monthly ATR value is roughly around 1096. And as of now, in this month, only it's almost half a month, and almost 70% of the ATR is consumed. So 745, 746 ATR is consumed. So I'm not expecting further increase with a strong momentum on the upside. So I'll be seeing a small grinding movement on the upside, range bound movement from here onwards. So if at all there is a movement of all 1100 ATR value, we might see somewhere around 18,100, 18,140 levels. Beyond that point, I don't see any movement on the upside. So right now, taking long trades is not advisable as movement is also fading off. The monthly ATR is also exhausting, and it's good to go shorts, not aggressive shorts, but as of now, if we get good opportunities, it's good to build short positions. And on pullback, it's good to have long positions. So right now, the zones are very key important factors to take trades on both the directions. If market respects supply zone, we'll be taking supply short trades, and if markets come down, we'll be taking long trades with a very tight narrow range, with a very tight stop losses. So as all the possible scenarios we'll be discussing on weekly time frame. So let's dive directly on the scenarios. The first scenario, what expect that market go and honor this supply zone, take a support, and then market crosses beyond that supply zone and goes all the way to 18,338 levels. In this case, the ATR would expand to 488, which is less probable, frankly. And if at all market goes beyond 18,040 levels, I'll be slowly building up skewed straddle positions to capture this momentum. But I expect that this scenario would be less probable. And then there is second scenario where market crosses 17,950 and slowly market gradually grinds between this level itself till this zone. So this would be very slow momentum on upward shift. In this case also you can have a very slightly skewed ATM straddles. So this is also less probable, which I expect that market might honor 7,900 supply zone on coming trading days. The scenario 3, which I expect very highly probable, scenario 3 is where market goes and respects 17,905 levels supply zone and starts consolidating at this particular range, taking support at the supply zone at 17,689 and giving a doji kind of close. In this particular trade setup, we'll be taking trades on both the levels. In the supply zone, we'll be creating short positions, and in this demand zone will be creating long positions. So as of now, I expect that this tight narrow range of market with an ATR of less than 250, that is 205 levels. So range is what I'm expecting, a range bound market of 17,685 to 17,900 levels. So in this kind of trade, on supply zone we'll be taking supply short trades, and on demand zone we'll be taking long. So this is very highly probable scenario. And yes, one more scenario is there. If markets gaps down open on tomorrow's trading session and continues to go and honor this demand zone slightly, and then crossing below this, taking a support at this particular level, 17,570 level, and giving a close somewhere around here at this particular level. So this is also there is a very good probable chances that this might also might happen in the coming weeks. But yes, we need to be very careful in taking long trades. We need to have strict stop losses. And as of now, I won't be taking any aggressive trades at this particular point. This is the immediate demand zone, so I'll be booking 1:2 immediately. I won't be trailing any profits at this particular point. At this point, at 17,570 levels, yes, there is a very good probable scenario that it might give you a fantastic return, and market might go up to all the way from 7 till this level, 17,700 level. So these are two key levels which we need to be very careful about. And these two scenarios, scenario number 3 and scenario number 4, is very highly probable scenario for the next week. And for the last scenario where market might gap down open and strongly takes out the zone of 17,643, taking all the way to 17,570 levels, honoring it and going beyond that, then market might consolidate with slightly aggressiveness on the bearish side and taking support till 17,260 levels. So in this case, there are two particular things we need to be very careful about. We need a IV spike beyond 13 to see this kind of momentum, and we need a daily close of below 17,640. So if these two case scenarios is done, then I'll be closely watching market, taking long positions only with a very tight stop losses and not aggressive positions. Because in this scenario, market might come all the way till 17,460 levels and 17,260 levels. So that could be very good zone for taking long positions, aggressive long positions at this particular place, and not building up positions right away here. So these are the possible scenarios. And for the broader index Nifty. And for Bank Nifty, I see that market is momentum is very strong. It has given a breakout of this long-term trend line, and it has given a close about this particular point. So yes, market might gap up open till 42,600, and market might consolidate at this particular range. So similar kind of setup I see in Bank Nifty also. The range of the complete range of 140 1,400 levels might not be exhausted. Somewhere between 800 850 levels of range might be there. A doji kind of market which I expect for the coming week. And one more thing, key factor is that there are a couple of results, big companies' results are coming out. HDFC result has already come out. So we need to be very careful. The scenario might change overnight itself. So it better be prepared and keep tightly hedged positions for overnight risk. And for the intraday risk, it's better to have a very strict stop losses, because in tight range, market becomes volatile. Once there is a trend has happened already, the market might start being volatile. Before a trend, there might be a volatility. After a trend, there might be a volatility. After that period, a range bound market will be put there. That would give us a time correction market. So we need to be very careful that market might give us a volatile session hunting stop losses. So be prepared for both the case. And this is the overall picture for Nifty and Bank Nifty. In tomorrow morning session, we'll be having what is the trade plan on intraday charts as well, and what we can expect for market with an expectation with a view on SGX Nifty as well. So thank you for joining Trade Talks with Jitesh.